Well, it's certainly a fluid situation that's changing sometimes hour by hour. But I think what the key concern is really is, as you mentioned, that Strait of Hormuz and how much of the oil supply can get through that strait. As you said, it's about 20 million barrels a day of our products. So that's something to really critically watch going forward.
So how big of a disruption are people expecting this could be to global supply?
Yeah, there's two parts that play into this. One is what the markets anticipates going to happen in terms of if this is a long-term or a short-term conflict. And the second is just the overall supply and demand dynamics. We were in a bit of an oversupply in the market, so there was some cushion there. But I think certainly as this continues to go forward, if it's resolved quickly, I think it's going to be a short-term lived bump in prices. If it's something that happens over, a longer-term period, it's certainly something that's more problematic.
Angie, President Trump said the U.S. will ensure safe passage of oil from the Middle East, and that the U.S. will offer insurance to help ensure the flow of energy. Will that be helpful? And if so, to what degree do you think?
Well, I think it really just depends on how much of those tankers can get through. If the strait is open and the flows can flow pretty easily, then I think, supplies less disrupted.
So what buffers do we have? What are the alternative sources here?
Yeah, that's a great question. There's a little bit of a buffer in terms of an east-west pipeline that the Saudis have that run through the Red Sea, but that's only about 4 million barrels in capacity, so that's pretty limited. We do have the strategic reserves. The U.S. has roughly 20 to 25 days of strategic reserves. China has been stockpiling some of their reserves, so there's some buffer there. But in terms of other buffers, I've had a lot of questions around the U.S. shale industry. We don't really see that as a spare capacity at this point. It would need a couple of quarters for that to ramp up. And of course, we would see a Liverpool if that's more of a long-term issue for us.
And Angie, what are we hearing from some of the U.S. producers? Are they in fact thinking about ramping up production here? I mean, boy, with these prices, you would love to get more oil into the market, perhaps.
Yeah, it takes more than a couple of days to get the production ramped up. You've got to put the contracts in with the drilling companies. You've got to get people on board. So at this point, I think everyone's more of a wait and see. You don't want to ramp up something that if the prices are going to be short-term lived. We also have had a lot of consolidation in the market, in the industry recently. And so the smaller players that maybe typically would have rushed in and added to productions, those don't exist anymore. And it's more of the larger players, and their investors are telling them they want discipline reserves to shareholders. So I think it's more of a wait and see at this point. What we are seeing is companies putting hedging in place to try to lock in on some of these prices.
Interesting. How about OPEC? Have we heard anything from OPEC or OPEC Plus?
Yeah, OPEC, as you know, just said that they would release about 200,000 barrels of spare capacity. And so the majority of the spare capacity with OPEC sets with the Saudis and with the UAE. So there is some flex there, but again, if the strait's closed and you can't get that supply through, and there's limited capacity in the pipeline, it doesn't really help that much.